Welcome to the Growth and Banter podcast. My name is Blake McCullough, CEO and founder of GMS Media Group, one of Australia's leading digital marketing agencies. This podcast is for anyone looking to learn the insights and strategies of industry leaders and how to build a successful life. Today, we're joined by Theo Chambers, CEO and founder of Shaw Financial, Australia's #1 independent brokerage. I hope you enjoy. Welcome, Theo.
Thanks for having me.
Great to have you on. Now, aside from catching up, it's been some time since we've properly sat down. We've known each other a while. We're here to talk about Shaw and everything that's new with the business. But I want to get into your story and initially sort of peel back the layers and understand sort of your trajectory and, you know, your sort of career in finance and how you've started what's now Australia's leading independent brokerage, Shaw Financial.
Yeah, sure. So it's an interesting story actually how it started. It probably goes back to me knocking on doors selling Foxtel when I was about 19.
That was my first job, Foxtel Media.
I actually wasn't working for Foxtel. I was working for a sales company that had multiple contracts of selling products or services, and I happened to be on the Foxtel account.
Right.
And then, yes, one door that opened was the one door I knocked on that, you know, that had a yarn with the person inside was the area manager of CBA.
Okay.
And they offered me a role in the branch network. At the time, you know, at 19 years old, I was thinking banking. Like, I don't really want to get into banking, you know. How much fun could that be? But then I joined CBA for 3 years and was working in the sort of retail network. That's where I started writing home loans. I originally wanted to be a branch manager because I thought that was the big dog job, you know. Thought that's a natural way to progress in my career. And then I sort of realised that the home loan specialist was more suited to me. It was more engaging with customers about their property journey. I was passionate about property. I am passionate about property, and you get out what you put in there. But ironically, on my first property, even though I worked at CBA as a lending specialist, when I bought my first property, I used a mortgage broker to fund that transaction.
Yeah, right.
So then I started realising, hang on a minute, I'm on the wrong side of the team here.
Yeah.
And that broker offered me a job at McGrath, and that's how I got into broking.
Yeah, wow, 360. And like you've had a lot of, I guess, like growth within Shaw Financial. It's been operating for some time. You've won an enormous amount of awards. I'm sure your trophy cabinet's getting bigger. But like today, I think the biggest shift in the market and, you know, undoubtedly probably the biggest concern with people right now, you know, with buying property is interest rates. How has that shifted the market over the past few years? What are you seeing right now in the market?
Yeah, so if you go back to that story, I've been in lending for like 16 years, and I've never seen a more turbulent time in lending and interest rates. You know, we've had the most volatile rates on record, I think record being a bit over 30 years. It's just gone up and down like a yo-yo. So I guess going back to obviously COVID, emergency rates, they were never going to be sustainable long term. It instantly sort of stimulated the economy. It did what the governments around the world were hoping to achieve, but then we sort of paid the consequence with inflation a couple of years later. So since then, you know, from 22 onwards, it's been up and down. It's been crazy. It's funny, the power of confidence and sentiment is actually more crucial than actual interest rates and affordability. Yeah. So what I mean by that is that in 2022, interest rates were still low, but just started to go up as of May 22. And that second 6 months of 2022 was actually when the property market came off. The rates were still like 2.5%, 3%, right? Ironically, in 2023 and 2024, when rates were peaking and plateauing, that's when the market took off. Well, I wouldn't say took off, but continued to grow. Despite affordability constraints. Yeah. So, and that just comes down to the power of confidence and sentiment. In 2023 and 24, people could see that rate cuts were on the horizon and they were making decisions based on future expectations. You know, where affordability aside, it's more about, you know, how confident they are in executing, you know, so.
Yeah, well, and with sentiment, like how big of a part does the media have to play in this? Because I know with fear mongering and, you know, like that initial rate cut, like you said, it was still extremely low. if you compare the average over the past 40 years, like it just hasn't been that low for a long time. And now we're probably at a standardized price now. So how big does the media play a role in all of this volatility?
A huge role. And media now is a very broad word, right? So, 10, 15 years ago, media was typically our, news and radio stations, like TV and radio. Nowadays, it's all forms of content that's in front of you, and people have a lot of content in front of them at any given sort of time. Like people are looking at their phones throughout the day, and they're being served content, news, information throughout the day.
It's dead set non-stop, isn't it? We're on a computer, then our phone, then we go home, we've got a TV.
Exactly. And sometimes people don't even realize that there's a subliminal message in that content, right?
Everything.
There's someone with a motive trying to get you to do something, and it can look like an article, but the person paying for the article has a motive, right?
I've heard that you get served like 10,000 pieces of content a day in the form of like advertisements and just general content.
Yeah.
That we don't even realize.
And no wonder everyone's so anxious, because you've got opposing arguments sometimes in the content. People don't know what to do. But yeah, to answer your question, media's played a big role in that. I've never seen consumers more reactive to forecasts on interest rates. Like the word inflation wasn't even something that was spoken about in our day-to-day business. In the sort of first, let's say, 5 years of our business. Now everybody's focused on inflation. Everybody understands the difference between headline inflation and whatnot. And people are watching what the bank economists are saying with forecasts of rates. They're really acute to finance markets, and they're extremely reactive to whatever comes out. So as soon as some bank economist says, like last year, for example, someone forecast that there were going to be 3 more interest rate rises to come. All of a sudden, there was no confidence in the property market, and all of a sudden, people just went back to just pausing their house hunting, because everybody's hoping for a discount. Everybody's hoping for a correction.
Is that the back end of last year?
Yeah, exactly right. And also that was the Trump effect at the back end of last year. It was a bit unknown.
Yeah.
But yeah, it's crazy how reactive people are to media and news that comes out on a daily basis.
And from a consumer point of view, with borrowing capacity, how much has this affected the people, the ability to borrow, just from these obviously initial rises all the way through to peaking to now dropping 0.25%. How is that affecting people's borrowing capacity, both from a new home purchase all the way through to investment portfolios?
Well, this is probably just the long expected relief, right? So going back to the media and the economists, the major bank economists, this was expected a year ago, right? This was being priced in at February 2024.
And it never happened.
People in late 23, like I said, the market was strong in 23 and 24 because people were being told by the media that all the major bank economists were forecasting a rate cut in February 2024. So, and hence why last year, I like to use the word yo-yo reference, because that was what was happening with confidence as different forecasts kept coming out. So this cut that happened in February, it's more of a relief rather than a sort of a booster to the household income, let's say, or household finances. The actual impact on serviceability and borrowing capacities, like how it increases someone's serviceability and borrowing power, is quite minimal in one cut. You're talking about 3 to 4% on average. So it's not going to make a huge difference to the bank in terms of what someone's willing to spend on a property and what they can afford. A series of rate cuts will make a difference, but one's not going to change things drastically.
So if anything, it's just sort of improving the sentiment in the market, but not so much the borrowing capacity and the ability to lend as well.
Spot on. People now can finally see that the rate cuts are here. Although Michelle Bullock was very clear in her media announcement sort of after that last RBA meeting that expectations of future rate cuts can't be guaranteed, people shouldn't have those expectations, I should say.
So it's setting the norm for moving forward almost.
Because a lot of people think that there's going to be maybe 3-4 more rate cuts throughout the year, which there could be, there might not be. And that's all dependent on future data. So that's why she's managed expectations and saying we've got to wait till the next quarterly set of inflation. Everybody thinks that inflation locally is reported monthly because there is a monthly indicator, but we're actually reporting inflation quarterly. The quarterly data is much more comprehensive, and that's what the RBA needs to use to make a decision. So end of April, we'll find out that.
Okay. Where do you think it should be at the moment, considering all things in the economy?
I don't think we'll see what happened in the US. So in the US, they've cut the rates 3 times now, but they're still higher cash rate than us, the Fed Reserve. 3 movements of 0.25 they've done, and off the back of that, they did have a little kick in inflation again. It went back up a little bit. I don't see that happening here because we've only had 1 cut, and I think inflation's going to hang tight around current levels. So I'm confident that the April data will be positive, and I personally do see maybe 1 or 2 rate cuts throughout the year.
Yeah, cool. I'm sure people are hanging on. Like last year, I think was tumultuous and volatile for businesses overall, not just, the interest rates, property market, speaking from a Sydney point of view, but Australia-wide as well. Like it's been a pretty tough process for a lot of businesses out there. And a lot of businesses have had to navigate this change of buyer sentiment. Retail has been really tough as well last year. And just tightening of cash flow, I think, around Australia has just caused a lot of industries to tighten, and a lot of cash flow spending to tighten as well. What are some things that you guys at Shaw have to do to navigate volatility and also tech disruption in the industry?
That's a broad question.
Yeah, it is.
So
we'll start with whatever you want.
The economic climate.
Let's start with that one.
So it's been tough navigating households through these tough times, that's for sure. A lot of people did commit to excessive amounts of debt in COVID and make long-term decisions on low interest rates. And then they've got themselves in a predicament where they're struggling a little bit financially, and they are in a bit of a cost of living crisis or affordability crisis. But at the same time, people did start doing things in COVID, habits that are hard to undo. When people start living a certain lifestyle, it's hard for them to go backwards. So true. And people did start spending more in COVID. It's simple. The data globally supports that. People just started living a more of a sort of a flamboyant or frivolous life, and then they had to go back to reining it in a bit. And sometimes we need to be the ones having that conversations, which is a interesting and tricky one. But people made those right decisions naturally, eventually. It never got to a point. It was very rare did we see where someone's actually not making their mortgage repayments. If you look at the data, arrears only crept up a tiny amount in the last sort of 12 months. Okay. People just had to maybe get rid of that fancy car that they leased. And just, not spend so much on holidays and
live within their means.
And
no more Europe trips.
This is going to be a controversial comment, but there's a lot of data out there talking about mortgage stress, and that mortgage stress is defined where there's some have different definitions but basically when 30 to 40% of your household income goes towards your mortgage repayments. Personally, I think that is a decent amount where you should put 30 to 40% of your overall household income, because it's an asset that's appreciating tax free, right? So I don't think that was a crazy statistic that a lot of people got to that level of 30 to 40%. I've basically been doing that my whole life. But yeah, I guess how do we navigate through that climate, and what did also recent tech do to get us through there? Well, what was crazy is that we had record volume through COVID, a record volume through low interest rates, and we had to hire like crazy to cater toward that volume. Yeah. So we had to bring all these processing staff onshore and offshore, and then all of a sudden the tap got turned off overnight in 2022. So then we had to sort of have some tough conversations with some of those processing staff. And then at the same time, there was tech that slipstreamed a lot of our processes. If you look at how we process applications 10 years ago compared to today, it's chalk and cheese. Like even 10 years ago, we were still faxing applications to banks like ANZ, right? Like one of the biggest banks in Australia, they were accepting applications by a fax machine. 10 years ago. So crazy. That's come a long way now where everything's digital. We're a lot more efficient in terms of processing times. About 3-4 years ago, it used to be about 3-4 hours just to process an application, just to put all the information into the system and go from start to finish. Now that's down to like half an hour, 45 minutes. Mainly just from also collecting the information electronically, having all the supporting docs in an online app, and then our staff just tweak the data in there to make sure it's accurate. And just a lot more. It's an end-to-end solution now. Because
obviously it helps the consumer too. I'm going through the process right now with Paris with my settlement, which we had to, false start a few times. My development's been held up for 2 or 3 years. And I have to just redo the financials and then do them again. Then the interest rates have changed, and I've had to go through different avenues with Paris. So it's been, it's been a sort of complicated process.
So the exact system I'm probably talking about.
Yes, yeah, exactly right. But without having something like that, it would get very overwhelming for the consumer, right? And also for the broker.
Well, something as simple in that system that you probably just went through recently was that electronic client portal that collects information electronically.
Yeah, that's so good.
Directly off the consumer. 3-4 years ago, we weren't doing that. 3-4 years ago, we were still using PDFs to collect information. We'd send you a PDF, you're writing it, you're filling in. 2 years
worth of data as well.
Yeah, and then we've got to take that PDF and put it into a separate application system. So it's a double entry of information. And now it's all in one place, which also means, you with your marketing background will appreciate, you have a much stronger ability to then market to those customers and clients that don't proceed for some reason. So I reckon our conversion of leads to settlements is like 10-15%, just because a lot of people reach out to us, have a chat, but then don't proceed, or they can't get approval for some reasons. There's also then a huge amount of people that get approved and just don't buy. So there's, call it 80% of all those leads that go into the system that you want to nurture over the next few years to qualify them. And the more information you have from them up front when you collect the information, the better you are at targeting them in certain ways.
So you're looking at the data, measuring it, and then effectively making your own marketing materials to reach back out to try and indoctrinate them back through the process.
Yeah, well, you think about how marketing has evolved, since we started our business in 2013. Like, the idea of just doing a newsletter is so outdated and redundant. Like, we still do our newsletters, don't get me wrong, but you need to be far more targeted in your approach of engaging with consumers. You need to be doing, a proper SEO, Google strategy. Sure, there's socials as well, but I think socials are more for branding. They're not the best in a services-based business, in my opinion, for us in engaging customers and creating customers. Then you got podcasts. People like to be educated; they don't like to be sold to. So if you're just selling something to someone, they're naturally off-put. You need to give them something for free, like an ebook, and then build a relationship over education.
That's right.
We find that far more valuable than anything else.
Talking my language.
Yeah.
It's definitely shifted to a creator economy and brand economy. I think brand economy, personal brand economy. I think people like to engage with a personality or an authority, or something that's authentic, hence why there's lots of influencing and UGC going on with product businesses. But I think gone are the days, like you said, where, and this happened on Facebook 10 years ago, brands would get a tremendous amount of engagement on Facebook. Now it's next to nothing. But people really do connect with personal brands and education first, and they want to see, because at the end of the day, whether you're buying a product or a service, people buy from people, right? So that human touch, I think, has forced a lot of people, in businesses and their own roles to pick up the camera or pick up the phone and start sort of educating their clientele. I mean, there is obviously caveats to that. Not everyone needs to market their business and brand, but I think for the vast majority out there looking to cut through the clutter, personal brands is where it's at.
And there's a different strategy and solution for different industries and businesses, right?
And different platforms as well will be better for certain businesses.
Yeah, some things work on Facebook very well, maybe fashion businesses work very well on Facebook, less successful on Google, But I think for a services business like us, it's the opposite. It's about creating content that makes you rank organically in Google. You got to think about the consumer that's using Facebook and what they're doing. They're generally just browsing, right? And you might pick a lifestyle asset, make a lifestyle decision, like buying some clothes or clicking on a holiday or something like that. But do you want to engage with a finance professional when you're scrolling on Instagram? Sometimes it's like, oh, not right now.
Yeah.
But when you're going to Google, you're Googling something to transact.
It's high sentiment.
You're researching something that you need to know.
Yeah, Google, like that person has it in mind already. They're searching for something. Social, you're searching for them. So the psychology is completely different. And just on this topic, you know, obviously you guys have maintained a pretty strong lead, you know, being that sort of number one spot, leading independents and winning lots of these awards year on, year out. What are some of the main things you guys are doing, or what's working for you to continue to get new customers, both from like a, you know, personal brand point of view and obviously with Shaw as well?
Constantly evolving is probably the best way to answer that. We've never thought we're perfect. We're constantly trying to innovate our business and look at different ways to do business, and constantly looking at value adds for our clients and our brokers, right? Me as the business owner, I've got two customers. I've got brokers that, you know, I want to try and support them in their day-to-day, and then I've got clients where we want them to be clients for life and repeat customers. And we don't just want to speak to them about buying a home. As the relationship matures, we now also speak to them about investing and using equity in their home or super to buy an investment property.
So that advisory piece as well.
Exactly. It's a vice-driven relationship. And, you know, we the long-term outcome is to help them create wealth for retirement through property. We recently branched out and had a new division in our business last year called Shaw Invest, where we syndicate commercial assets. And we syndicated a shopping centre in the Gold Coast last year. Syndicating meaning that we split the ownership proportionally amongst investors and their contributions. Okay. And then every investor owns a percentage of that asset. So we're going to aim to try and do one or two of them a year now. Things like that, right? And, you know, I guess going back to the marketing comment, how we've been innovative there. Well, we've built a podcast studio in our office. Yeah. We do online webinars where people can engage and ask questions at the end. We get, you know, buyers agents, accountants, and various professionals which our database wants to ask questions about or ask questions to. And same as actual seminars. We get people in the office. We go to our real estate partners and do joint seminars with them. So just engaging in the audience as much as we can. And then I guess, you know, like I said, that's all the things that we've evolved to try and service our clients better, to maintain organic growth. On top of that is how do we service our brokers better? And that's come a very long way. You know, 6 years ago, everyone in the business had their own assistants and they ran their own processes, and they, you know, wasn't able to standardize our systems and processes. Now we've got, you know, if you include all the offshore staff, probably close to 60 offshore staff in the team.
Yeah, wow.
About 30 of them are in our centralised team and centralised processing sort of division. So we're now striving for that standardisation, and that's a real great value add for our brokers, because that's been something that's also changed a lot over the years. It's become very costly to hire local admin staff, and as there's been a bit of margin squeeze, you know, people have looked for ways to remove expense in their business, and the whole industry now has pretty much gone offshore. You know, like 5-10 years ago, it was still a new thing to do for a lot of brokers. Now pretty much everybody's doing it, and that's put then pressures on finding offshore staff. Wage growth has happened in Manila, and it's just hard. It's saturated. It's hard to actually find experienced staff because
locally
in Manila.
Oh, Manila, yeah.
Because everybody's doing it now. So doing things like that to sort of help the brokers support them in a day-to-day. So finding, if they use our centralised processing staff, they don't need to worry about finding their own Manila sort of processing staff. And also then we can just constantly analyse the end-to-end, the start-to-end process, let's say, and make sure it's just, you know, addressing all the nuances that a customer might be privy to.
So you've sort of gone from like a free-for-all, you know, the broker sort of has to do their thing to compete, and then now a bit more of a structured system that people can then replicate that over each broker. And that's obviously important for scalability, right? Because you need that sort of structure and also quality control, I'm sure, as well. You know, you don't want your brokers going too rogue with Shaw as a brand name too.
Well, it's a guarantee service proposition, right? You know, now we know that if you use our centralized processing team, you're guaranteed to get an annual review from the customer care team. You know, there's certain triggers of sequences in our automation along the way to make sure that we've explained everything accurately at every step of the process. But that's just one of the value adds that we've done to our brokers. Obviously, on the context of marketing again, we just now generate leads to support brokers.
Yeah, cool.
Once again, maybe 5, 6, 7 years ago, we weren't providing leads to our brokers. You know, our brokers would have to go out there and find their own. So we're just constantly looking at ways to support our team and customers more and more.
Yeah, and I'm sure that would help with retention and nurturing that relationship and culture as well, which obviously is a big element of building a big team. We've got similar plans, like not on that level, but we're going into a bigger office and partnering with a few other complementary agencies and players in our space to build out a sort of one-stop shop. Part of that's going to be an AI team. We've also got a couple of staff in Manila that help with things like, you know, a lot of the grueling weekly reporting that we do for our clients, and also a bit of like EA work and just, you know, calendar management and meetings and stuff like that. I've got a friend of mine who's built this AI. It's called like an AI agent. So we're sort of building out that process to be able to support our internal teams. So then they're not always coming to, you know, top level leadership and hassling us all the time, but there's going to be that internal support system, and then also for clients externally too, because it's such a huge, you know, and same for you guys, service business. It's just so human resource heavy, you know, and there's so much customer service that goes on and so much support internally. So yeah, that AI sort of infrastructure is what we're going to try and build up internally that can hopefully sort of alleviate the workload from a client point of view, but also allow our clients to be able to, you know, connect with us 24/7.
There's also a balance, I feel, with those internal resources, right? So
for sure,
we've come a long way in having, you know, in-house resources and sort of day-to-day things that the brokers can adopt and use in their day-to-day activities. But if you overwhelm them with information and you have too many resources that they get lost on the online to the Ethernet to find, then it's just
too conflicting.
It just becomes too complicated, and they're like, oh yeah, I was in that folder, I couldn't find it. Oh no, it's in this folder. You know, like,
yeah, you need a good mix. You need a good mix of like human element interaction, but you don't also want someone asking the same question 20 times. You know, so it's like, yeah, the balancing act and like technology's there, but you need to mix that with the human touch too, right? So it's that striking that fine balance.
Yeah, I used to have that feeling or thought process where if someone keeps asking the same question, let's say from the customer front, we're not doing something right ourselves because we need to automate that, and that those questions should be outlined already in the standardized process. And we've come a long way with that, but still, to your point, some things just need to be explained in a phone call.
100%.
And that's why I think there's a long-term position for brokers with all this noise on AI, because consumers, you know, are making the biggest decisions in their lifetime usually when they're buying properties.
For sure.
Right? You only make probably a handful of those decisions in your lifetime, and you're not going to just be robotic about it. You're not going to engage with an online platform and just get an online approval and say she'll be right.
No, you're so right there. Like the mix of the two, you can't have one without the other, and you can't be too skewed on just tech unless you are a SaaS platform. That's a whole nother business model, right?
Yeah, but you need empathy, you need emotion. You need someone that's going to hold your hand. That's why I've always had the view that you know, I see AI as an opportunity, not a threat.
Yes.
Right.
Yeah.
And I've always had that view to technological disruption since the day I've been in the industry. Like a lot of brokers today would whinge that it's gotten so much harder, but in my opinion, it's gotten so much easier.
Yeah.
Right? Like you look at things like just faxing something to ANZ, like we now just press a button and it's there. Yeah. Right?
They don't know the pain.
No, and like just entering that information from a PDF into a system, and you know, even something as simple as this online borrowing power tool, which compares all the banks on behalf of the brokers. Like we have that in our processes now, and that just really makes the job much more quicker and efficient, right? Yeah. So if you look at all these things as threats, then you will become outdated. But we look at all these things like AI as an opportunity, and I think that we're going to use AI in the future to complement our business.
Mate, I'm with you on that one 100%. Like I've even had, and going back on that sort of human touch versus technology, like I remember even renting a joint in Bondi, and the property team they were using and what my agent was meant to be, I had to keep going through an app, right? So I didn't really have one agent looking after my property. So you're constantly dealing with all these multiple people, double handling things all the time. And like to get out of the lease was a nightmare because like they couldn't find the keys. They kept blaming me. It was just disjointed. It's a classic experience of just having a really bad experience, right? Because there wasn't that sort of consistency with that support of the one person. But yeah, I think the human element to wrangle technology and AI is crucial, and I think that's what's going to really lead the way with people. But yeah, you're right. It's complementary. It's not a competition to us. Yeah. At the end of the day, we've created it, so we've got to learn how to use it. In terms of what you feel is, probably one of the hardest challenges you felt in Shaw over the years, aside from some of the things we mentioned and being quite a tumultuous, period over the past few years. What has been some of the hardest challenges, do you think?
There's quite a few of them. I think it's about getting back up after these challenges when you get knocked down.
Fully.
I think...
As the song goes?
Yeah. I think number one is sticking to your lane sometimes. I tried building some tech. We did build some tech, and I haven't released it to the team yet because it's just not good enough. And then I was spending so much time in perfecting it. I'm like, hang on a minute, am I a tech guy or a mortgage broker? What's going on here? And things like tech, there's so many global off-the-shelf solutions that provider is going to spend so much more money on than you are personally to have a proprietary system. And you can just customize off-the-shelf solutions. So that was a challenge, the tech challenge. I guess going back to our earlier years, we've had senior brokers over the years come and go, and dealing with those senior figures back in the early days leaving was tough because that can really affect your culture. People don't know who to believe, and it becomes quite poisonous to your culture. One year we had almost half the team leave because a bunch of senior brokers left, going back almost 10 years ago now. But we've become so much more resilient to those challenges, and also we've learned from them. We've adopted their criticism and taken on their feedback, and we've changed our business accordingly. And now we're a much more robust and resilient business because we understood their pain points back then, and we've changed our business accordingly.
So rather than treating it as like a fuck you situation, it's like, cool, okay, how can we learn from this and get stronger and build from it?
Spot on. And that's what we both did. In hindsight, we some of those senior brokers that have left over the years, we appreciate each other more now. They helped me and I helped them, and together we achieved something.
There's a silver lining in every hardship, right? And I think that's such a common thread and a classic example of what it takes to be at that consistent level of leadership is just being resilient and just constantly looking for the opportunity in a bad situation.
100%.
Yeah. On the flip side of that, what do you reckon? I mean, again, aside from all the award wins, what's your proudest moment in the whole journey?
I guess the proudest moment is right now, today. Looking at the business and brand and what it is today.
Current, present.
That is a proud thing in itself. We've got a beautiful business where the people in the business and people that, over the years that have maybe left the business have all really taken something and achieved something at Shaw Financial. And that is something to be pretty proud of. We've helped a lot of people achieve dreams of home ownership. We've given some good advice along the way to change people's thought processes. And everybody in the business is also, succeeding. It's a great success story, and that creates this beautiful culture and family that's so lovely to be a part of, and I'm proud of. Yeah,
it's awesome, mate. Well, you've done phenomenally well. Going back to the team and culture, again, it's you can't just grow a team and expect them to stick around and, actually support and respect you without having, a cultural vibe within that office. And I'm sure there's certain things you do. I've seen some of the sort of getaways and workshops you guys do to sort of, build that, getting people bought into the North Star of what you're trying to build and constantly updating that.
Jump on the vision.
That's right. And just getting everyone bought in. Talk us through the strategy there of how you implement that culture and what's working for you.
That is such a crucial question and such an important question. culture is key in any business, right? And it can get derailed quite easily, you know. So going back many years ago when, you know, there's some rotten eggs that spoilt the bunch, you know, it does turn into...
I've experienced that before.
Yeah, it does turn into, you know, it can be, like I said, close to half the team leaving and half of them, you know, ending up in somebody else's office too. And, you know, it's a challenge. So you got to make sure that you have a culture where you also take feedback and any criticism and then adopt it and, you know, be constructive about that. But at the same time, you got to make sure people are believing in your vision and understanding your boundaries for certain reasons. But then to actually just, you know, have a culture where it creates success and creates people to be hungry and self-driven and determined. There's certain elements of that where you just need to hire the right people and it's outside of your control, because you can't create work ethic in people. You can't create them to have the right attitude.
For sure.
You can lead a horse to water, but you can't make them drink, right?
100%.
So you can do the best you possibly can to create the environment, the culture that can make them thrive, but it comes down to them taking action at some point. So what we've done to maintain that culture, though, to your question, we invest a lot in our team events. So we have a annual strategy day where we take the whole team off-site for an overnight stay somewhere. It's quite hard to get the whole team in one spot with their undivided attention, I should say. Yeah. And so that's the one day pretty much annually where I can talk about things like tech and, you know, new initiatives and projects that we're launching in that year ahead. So we do it in August to be for the financial year ahead. We also, you know, have a Kickstart conference at the start of the year. I learned a lot of these things from cultures in the past that I worked in and appreciated. So that was McGrath had that culture. They had a great thriving culture. One team, one dream is the other philosophy that floats around the office. You know, there's no I in team. You know, I hate when I hear the words, you know, what's in it for me, or you know, it's not worth my time. That just needs to be squashed. And we squash those comments. And yeah, we're all about making people help the person next to them, and even with our customers, it's about doing things that, you know, you don't necessarily always have to get paid for. There's a lot of the work that we do we get unpaid for, but those relationships with clients, they see that, they appreciate that, and one day they'll come back because they feel like they're obliged to.
Pro bono work.
So all those values and beliefs are systemic, right? So me and my business partner have got to represent those values, and then they trickle down through the culture. Yeah,
and it's just like filtering from the top down, right? The hiring process obviously is crucial, and I going back to like what you said there, and I totally agree with it. I have that same view of you can teach the skills, but you cannot teach attitude and the willingness and the motivation to do the work. I think that can be learnt over time, but you know, you're not there to babysit someone's emotions. Like it's the skills can be taught, right? But like the general attitude and the vibe and that sort of culture fit is very, very, very crucial to get right at the start. Otherwise, they become toxic down the track, and they might be there for the wrong reasons. And you know, you might have a wrong personality in a certain role. Like we do a bit of personality testing just to make sure that, you know, we don't have someone who's really introverted on a client-facing role. You know what I mean? So certain things like that. But yeah, what are some whoever does the hiring in your business, recruitment, like is there any like sort of key questions or red flags that sort of you pick up through that process?
We're constantly evolving our hiring process. We've been doing general skills tests for some time now, but I don't even feel like that's enough. There's a famous saying that I live by: hire slowly and fire fast, you know, because sometimes you realize quite quickly you've made a mistake in somebody. You know, and it's best to get that person out of your business. You know, going back to some of those cultural challenges, as soon as some of those, you know, negative individuals leave the business, straight away the culture overnight improves.
Yeah.
And you can just see it every day.
It only takes one person too.
Yeah, straight away things get back on track, people back in the vision, and all that noise is gone. You know, so sometimes you do need to manage those people out of your business quite quickly, you know, and today we've got a record amount of brokers doing a record amount of volume because of maintaining that attitude and culture. So on the hiring process, the one thing I sort of like I touched on before, you'll never, in my opinion, ever be able to interview someone to figure out their attitude and work ethic, because they can say all the right things, They can tell you I'm so hungry and driven. They can claim all these crazy things they've done in their career, but the proof is in the pudding, right? Actions speak louder than words, and I've heard it all before. And sometimes you really
can see through the bullshit.
You really believe and back someone, and then you give them a great opportunity, and they don't do anything with it. You know? So, unfortunately, you got to be willing to make mistakes in sometimes your interview process. We now also have fine-tuned it to be somewhat online and then face-to-face, because we're getting record amounts of people applying to the business, and it was becoming very time-consuming interviewing all of them.
Yeah.
Like, I reckon last year I interviewed close to 100 brokers, and we hired 4.
Wow.
Right. So it's like a 4% success rate, right?
Wow.
So we've taken that process online for the initial conversations.
Yeah.
And I think also what's happened in the industry. Like, I wasn't interviewing 100 people 2-3 years ago.
Why do you think there's more demand? I mean, aside from obviously just continuing to go from strength to strength, but why do you think that is? More people looking to get into the industry?
Yeah, spot on. So we've had record growth in the industry, record amounts of brokers join. About 5-6 years ago, there was 13,000 brokers. Now there's 19,000 brokers. So it's extremely saturated.
Yeah. Is there room to move on that still?
I think it hopefully is going to go the other way. I think it's time to trim the fat. The industry average does like 1.3 million a month in settlements. I call them the pajama brokers that are working from home. They've got a handful of lenders they work with. And I think they're not doing the best for the industry sometimes.
And that's probably what's caused that demand. People just wanting to have a bit of a cruisy job and just make a bit of money on the side.
Exactly.
Yeah.
And some of those people have fallen into the role by being ex-bankers, and they have relationships, so it's okay. But then what's annoying about that is that it's attracted people to the industry for the wrong reasons. So some people think, in these, 96% of the interviews, some people think that, I could just work from home 3 days a week and I could make a decent income. I can live my own life. It's pretty cruisy. People just call you for home loans, right? And it's like, no, listen, it's not like that. Some people say in the interview that, literally. Like, I could work part-time.
You can really fuck someone's whole process up, like from a consumer point of view. If you go the wrong path or give them the wrong option or wrong loan.
Yeah, and there's also a lot to know. Like, we've got over 70 lenders in our panel, and you need to understand all their policy niches and the nuances as to why you will choose a certain bank over another. And if you look at how compliance has changed over the years, there's best interest duty, where you need to demonstrate that product is clearly the best product in their best interest, which I'm all for. I love that. But back in the day, people would just go, "This is a good rate. This is a good bank. We'll go this one."
Trust me.
Yeah, trust me. It's all good. So I think people are joining the industry for the wrong reasons. They think it's easier than it really is. And our job is to sift through that in these interviews and figure out the real reasons that people are joining our business. And you can tell quite quickly sometimes what's drawing them to the industry in our business. That's one of my questions, obviously. And there are some right answers in those interviews that really resonate with me.
Yeah, and it's filtering the 96% of the lemons out of it.
Yeah. It's just sometimes hard to condense that to a short interview.
Yeah, absolutely. Yeah, you want to get out of there. You don't want to spend an hour with them if they're for the wrong reason. It's very similar to our industry, like agencies, like how it's the barrier to entry is so easy. It's never been easier to create a business online, but it's also never been harder with competition, distrust, and everything's a lot harder online from a result point of view. We've got people that can create a website, stay at home, get a few clients within their inner network, and that's it. They're done. They can just replace their yearly income pretty quickly. So that's created a huge imbalance in our industry. A lot of distrust. 9 times out of 10, a brand's going to come to us being burnt before. So I feel like there needs to be some sort of regulation to an extent, just to weed out people that are just burning, like locking people in for contracts and just wasting all their money, And do you feel like there's going to be any regulation within mortgage broking at all?
Well, there's been some serious shake-up in mortgage broking, shake-ups, I should say. So, the Royal Commission 5 years ago,
Is that the Trail Commission thing, or?
It was the whole industry. Banking and finance and mortgage broking was a subject within that. And then, they recommended to get rid of Trail Commission.
Yeah, I remember that.
It was a little bit influenced by the major banks, in my opinion.
Sneaky bastards.
And, the alternatives were just worse for the consumer. And I think the ACCC sort of shared that view that no trail and higher upfronts would make it less competitive because only the major banks could fund loans at competitive rates with their capital. Second tier lenders would have to really increase their rates and it would become less competitive for consumers. And also, trail actually keeps brokers incentivized to maintain that relationship with the bank and make sure thereafter, once the loan's established, that they're servicing the client, which is a good outcome. Because sometimes the customer, I won't say sometimes, I'll say most of the time, the customer's not really getting the TLC they need from the bank. All the banks have shut down branches and moved online, and sometimes people just want to pick up the phone and ask some questions. Yeah,
imagine if there's no brokers going straight to the bank and getting none of that support. It would make it very hard, right?
And I can tell you, when I was the guy in the bank answering your questions, the way I'd answer your questions back then about mortgages or home loans compared to being a broker only a few years after that is chalk and cheese, because you're not knowing one bank's language and answers. You're knowing a plethora of banks' answers and languages, and you understand the nuances between lenders and what's going to actually change the landscape for them in terms of, let's say, borrowing power. Yeah,
it's a diverse view versus a pigeonholed view, and you can work on those options for the customer versus just having like a couple of options.
And also just putting numbers into a system was really what I was doing back then.
Yeah.
The system says no.
Sorry, disapproved.
Yeah.
Now, partnerships, I know you're close with, a lot of real estate agencies that you sort of feed on and stuff like that. Alex, who was on our podcast, a few months ago.
I'm surprised he got his time.
Mate, it was hard. It took a few goes. Yeah. He did say that on the podcast. He makes sure that people...
Was he checking his watch during?
Yeah, no, I had to wrap it up quickly. But he said that it takes he lets people continue to sort of ask until so he realizes like who's actually serious or not. But anyway, partnerships being like key, I think, for lots of businesses these days. How have you guys found like that process and, aligning yourselves? Was that sort of part of the process early on? Are you still finding new partners? Are you solidifying with sort of just a few? How's that sort of work for sure?
Yeah, so we've come a long way with that. In our early days, our partners made up about 65 to 70% of our overall business.
Yeah, wow.
Our overall volume was referred by real estate agents, 65 to 70%. Now it's more like 15.
Wow.
Just purely because of the organic growth of the business and the word of mouth. As brokers mature in our business, they naturally get more and more sort of inbound inquiry from happy clients, just calling them because a friend, a family member, or a colleague at work has raved about their service.
Referrals and that.
Yeah, and that's why we make all our incentives around sort of remuneration and commercial terms tailored toward customer retention and satisfaction. So what I mean by that, like brokers only earn more if they grow their book, and the book only grows if they've got happy customers staying with them, right? So we don't make them on volume. Some businesses out there do it on an annual basis based on annual volume. That doesn't reward the right outcome, in my opinion. So
less reliant on partners were obviously very crucial at the start, which makes sense because the brand probably wasn't as built, and then therefore you're sort of relying on more credibility with other sort of trusted agencies, and then now you've built that credibility, the trust is there, so less reliant on
I have to say, we still have about 2,500 real estate partners.
Yeah.
So we're still, that 15-20% is still a significant amount of volume.
You've just grown in that other area.
We've just grown the other channels. Okay. And like I said earlier, marketing was something that we weren't doing 6-7 years ago. And now we're getting a lot of inbound inquiry off the back of our content. And what's great about some of that inquiry, it's already pre-qualified with good content like this, like a podcast. Someone hears on a podcast about the value of using their super to buy a property, and next thing they're just calling the business going, okay, I listened to that whole segment, I want to do that,
Yeah.
So we're getting a lot more inbound inquiry and just other channels of business.
Yeah, and it's all about building the trust, right? And it's not even just about the inbound inquiries from a podcast point of view or speaking or whatever you're doing in front of, from a personal brand. It's just about, it also aids that sales process. I find that someone might hear about the business, they might then listen to a podcast, and then that sales process becomes a lot quicker as well because that trust is built.
Yeah, that's the pre-qualification.
That's right.
And that's going back to what we were saying earlier. It's also those subliminal messages in your content that pre-qualifies them too, right?
Yeah.
If you just constantly educate someone to realize that they are qualified to do X, Y, Z, and then, in constant messages, realize how easy it is to do that. You've done all the hard yards in qualifying them, and by the time they're reaching out, they're ready to engage and transact.
Yeah, that's right.
But that's why you need to have I'm preaching to the choir over here, but you need to have a clear content strategy.
Yeah.
And then going back to like overwhelming people with information,
Fully.
You can't just be, throwing, the kitchen sink at them with content. You can't have all these mixed messages, and there is so many mixed messages out there already on their phone. People saying, put all your money into your home. It's your only tax-free asset. And someone saying rent vesting, you never buy your home, you should be a tenant. And then there's next thing someone saying residential sucks, buy commercial. It's just what does the consumer think when all these messages are within 5 minutes of their feed?
That goes back to advisor as well, right? If you just had a system and people feeding information online and they'll go, I want this because this person said that. Having that advisory solution that you guys have, we'll be able to sort of steer that ship a little bit closer for them, right?
Yeah.
That's one thing we've had to do massively. That's been the evolution for us 10 years ago versus now. We were just placing ads and just fucking not really caring so much around all the stuff that was going into an ad. Now it's very much on, cool, like we need to start here, understand the situation of the business, even though we've done it for someone else that's similar. You're different, you're at a different stage, so let's tackle this first and let's go through that stage of priorities. So yeah, I just think it just goes back to that human touch, right? Yeah,
and that's why also, I guess this ties back to culture, but going back to empowering your team to know all this information, to give that, powerful human touch. So, we invest a lot in external trainers coming in and talking to the team on various ways to be better in engaging with their clients. I do a lot of tax training with the team, so they understand, trigger points in a conversation where there's a tax consideration there that might need to be a conversation with their accountant. We invest a lot in all that. Even just, something as simple in I keep saying new office, but we moved in there like 3 years ago now, in our new office.
How's that going?
It's great. It's really great for the culture. And there's even just a really decent breakout area, right, where there's, a big sort of kitchen and tables and chairs and a TV where people could quickly just go mingle over a cup of coffee. And if they're frustrated over a stressful situation, they could workshop it in the breakout room over a coffee, and they'll get 5 different answers or 5 different solutions to that scenario or situation. And that just once again improves that human touch.
Yeah, that's awesome. In terms of like now that you've got that sort of system going on for your team, with yourself and your business partner leading the way and having to navigate all these different changes in the market, changing economy, tech disruptions, whatever it is, who are you leaning in on to sort of get advice from? When you're reaching a hurdle, they're like, fuck, this is unprecedented. I don't know what to do here.
Yeah, that's a tough one because you've got to realize a lot of people that you speak to have their own opinion and sometimes their own motive, right? So for us, probably a controversial comment again, but for us, we can't lean on our aggregators. So mortgage brokers have an aggregator, which is an intermediary between us and the bank. Those aggregators want us to be reliant on their systems and processes. So
they'll just divert you back there?
Yeah, they'll always just say, oh, our system does that, our system does this. And if you want to try and build something else that's not relying on them, they get a little bit threatened by that. If certain new initiatives that might be more opportunistic in the current landscape or climate, sometimes they'll derail that because they don't want you to do that because they're doing that themselves. So yeah, it's hard to get unbiased advice sometimes. But I guess just speak to as many people as you can to form your own opinion.
Yeah, so no one from like even sometimes I feed into other people who have done it before in my industry, like
100%.
Yeah, like other sort of like brokers or heads of firms that have been there, done that you sort of tap into it all.
Yeah, definitely. In our early years, something that was so beautiful and humble was all these industry figureheads that would come into our business and teach our team.
Yeah, cool.
We had some really lovely industry leaders that would come in and share all their secrets of how they ran it and built a successful business, both personally and individually with their own personal volumes, let's say. And And even I remember this one individual was speak to the team, and some of the team said, "Wow, you're so open and honest. Like you're telling us all your secrets." And he was like, "I can sit here and tell you all my secrets, but it's up to you to implement them. And I know most of you won't."
Yeah, there you go.
And so we lean a lot on that. Unfortunately, some of those industry leaders are approaching retirement and doing less of that these days. But we still try and get external people in. And me personally, I've also just got lots of people I lean on for advice, left, right, and centre. So I've got a family of business owners, generations of them almost, and I lean on them a lot. Learned a lot at the family dinner table growing up, and then businesses where I also really appreciated what they've done internally with that business. So McGrath, when I was working at Oxygen Home Loans, I was very close to Jeff Lucas. And, I still chew the fat with him, and he gives some good insights. Yeah,
nice. Yeah, it's important to have not just business figures, but like you said, personal figures and, like tapping into different realms, because you get so much out of speaking to, having different conversations. You might speak to someone who's completely unrelated to your industry, and then you go, fuck, okay, that's helpful. Yeah, and it's funny how you sometimes meet these people. So I've also got a handful of really valuable client relationships, which, they're calling me sometimes for finance, but then we end up speaking for an hour about everything but, you know what I mean? Yeah. And they become our biggest supporters, our biggest advocates. And I catch up with them for coffee, or even bring my wife over to their house for dinner sometimes. And we chew the fat about business hurdles, because they're successful business leaders themselves. There's been some crazy stories you can witness as their mortgage broker. Well, that's the universe playing out for you. Now with Tash and the house that you're building at the moment, how's that process been? Just down the road from where I am. Yeah, it's been actually, I hate to admit it because everyone has the opposite experience, but it's been quite pain-free. Okay, that's good. Yeah. You're looking pretty happy in the snaps and the updates. Yeah. We have a great builder, Michael Walsh Constructions. Okay. I'll give him a shout out. Yeah, shout out. He is an honest builder, which is the first hurdle in sometimes engaging a builder. Absolutely. And what I also love, he's doing one project at a time, so you get his full attention. Every week, we go there on the weekends usually, and every weekend there's progress. Also, Tash and I, we both run our own businesses. I feel like, we are decision makers without sounding, egotistical. We know what we want, we know what we don't want, and we just get it done. I feel like sometimes in a build, people procrastinate about making a decision, and they get really stressed about something that they shouldn't get stressed about. This is also my second project in terms of a proper build. So I sort of know what's coming next. And I know also when you start a build, it's sometimes along the way, there are going to be things that you have a vision in mind at the very start, and it's not always going to be that vision and completion. It's always the case, isn't it? And I'm accepting of that. Yeah, so you're Palm Beach and Bellevue to sort of flick between the two. Yeah. Very good. Yeah, that was... Palm Beach was a renovation pre-inflation, which I was pretty happy about. Yeah, lucky. Yeah. How good. Very good. Well, outside of that, I think some advice, I'm sure a lot of people like you have learnt from other industry heads and leaders. I'm sure a lot of junior brokers, both within your team and externally, would love to hear your advice of like cracking the market. We've obviously spoken about the do's and don'ts of getting into the industry, having the wrong intention. What's some advice you'd give people that that are looking at you for advice? So the first 2-3 years is the most crucial, right? First impressions are everlasting, is what I say to everybody in the team. If you come into the industry kind of cruisy, and you go meet someone for a cup of coffee as a potential referral partner, and then you don't call them again for 3 to 6 months, you've already burnt that relationship, in my opinion. Because the first impression that you leave on someone is what they'll always constantly think. For sure. If you meet someone and then you follow up with them constantly with useful information, not just begging them for a referral, let's say, then straight away you've impressed them for good. So I think people, when they join the industry, need to come in guns blazing. That's what I personally did. You need to come in and really give it your all. I personally was working 6 days a week, late nights, going to open homes every Saturday for 3 years. Yeah. And that's what I sort of say to our team. We've got a broker in the team right now who's a record broker that we've ever had in terms of new entrant. He's already
almost top number one in the team.
Wow.
And he's only been there for like 18 months.
Wow, how good.
So I like to also take a little bit of credit. Maybe it's a bit of our support as well.
Yeah, of course.
But yeah, he's just doing the good old fashioned tricks that still work, which is going to opens and supporting our real estate partners on a Saturday.
There's no shortcuts. You can't beat hard work, right?
Exactly. And there's a lot of people come into the industry thinking they'll do something revolutionary and different, like start a blog page. I'm like, listen, that's not revolutionary and different, So I think, managing expectations of what to expect in your first couple of years is crucial. Go in and expect the first 2-3 years to be a real slog, and then it might be rewarding thereafter if you have a proper crack at it.
Yeah, I think that's a lesson for anyone, right? Like it's been this change of, I guess, perspective of what it takes to build a career and for any industry for that matter. And I think COVID's to blame for that. And younger generations is thinking that their non-negotiable is to come into a business or a career and work a couple of days in the office, 3 days a week, and do the rest at home and just have a lifestyle. It's like I just don't see how that's going to build a career unless you're an amazing content creator and you can just make it on TikTok. Like it's just it's a funny shift. Like I remember my first job at Foxtel Media, it was 5 days a week, and if I was late by 5 minutes too often, written warning.
Yeah.
And it was 8 till 7 p.m. It wasn't 9 or 10 till 4 or whatever. So it's like it's changed a lot.
You sound like me. I constantly say that exact thing to my team, that when I worked at CommBank, I had to be at the branch at like 7:40.
Yeah.
And if I got there at 7:45, it's like, excuse me, can we have a chat in the room? Yeah. Where were you?
Yeah.
And I'm like, seriously, like you make me sometimes stay back till 6 o'clock when the tellers don't balance and I don't get paid overtime. You know what I mean? And so like it's that the new age mentality of working from home and cruising in and cruising out. It's very frustrating to me.
Fucking lazy in my eyes.
We really squash that out. We've got a dedicated trainer and manager, like a learning development manager, and her attitude and sort of philosophy is that you have to be in the office to be trained and taught something.
Oh, for sure.
Because it's far more conducive.
To feed off other people and the energy and just what people say on the phone. Like you can't get that at home.
Yeah, exactly.
It's one dimensional.
And also, maybe you shouldn't just lean on the trainer and the development manager. Maybe you should also ask the 5-6 brokers sitting around you.
Yeah, they've done it before.
The team is like a brains trust. There's 30 brokers in one office that are all sharing and learning together.
For sure.
Just ask some other people who've done it before around you. So I'm big on people coming to the office, and it's funny how the new age, going back to what COVID's done, and also the new generation. I've been to some conferences recently where they talk about how the new generation, you can't just call them.
Yeah,
you have to organise a call, and if you just randomly call someone, that's intrusive. That's actually that's beyond my comfort boundary.
Yeah. So the media said it's like they try to implement a rule where like your boss can't call an employee after hours.
That's just even messaging after hours. Fuck. Yeah, you've got to have an allowance and the pay accordingly. Yeah,
insane.
Yeah, so look, I think there's lots of little things like that interesting landscape.
Yeah, I think like. Yeah, you can maintain work at home, but in terms of growing, thriving, having that creative juices flow, like you can't beat an environment where people feed off each other.
I tell you what, though, I think there is a shift of the employees wanting that again now too.
They want to come back into a vibe and a culture.
Yeah. I think that
because they get starved of it, right? There's no human interaction. They're at home, and then that's all they're doing. It's like, how is that? In my eyes, I think that's like quite monotonous and boring.
Yeah. So there's been a global movement by the employer. Employers now locally are even saying that promotions, pay rises, bonuses, and projects are reserved for people that will be in the office 5 days a week.
Yeah, right.
But at the same time, I think employees are striving for that team collaboration and returning to work.
Yeah, fully.
So I think it naturally will sort itself out.
Yeah, I mean, I think you got to have that balance, right? Like we have a bit of balance. We do a day at home. Might change in the new ecosystem. We'll have to probably shift out some of the days and hours there when we have other players involved. But we do like, a Thursday lunch and learn, buy them lunch, do a session, get them educated on a partner service or something else that's happening in the industry. Then we do monthly events, that will be more activity based, and then a quarterly celebration, so long as we've had a decent quarter. So yeah, I think having that sort of flow where it's not just office and do the job and see you later is important as well.
It's funny how you have to lure them in sometimes with like free food and drinks.
Yeah, fully. Yeah, well, to learn, but you have to. I'll buy you lunch, but you have to learn.
Yeah. That's how we get people to come to some of our team conferences.
They love it, but
we're like, hey, come in. We've got someone speaking for 2 hours. Afterwards, we'll take you out for pizza.
Yeah. They're like, sweet,
and they're like, pizza.
It's better than a bonus, right?
Yeah.
Cool. Before we wrap up, I'd love to sort of just get your, because I think from a high-performing individual like yourself, running a high-performing business, growing like it is, there's got to be sort of a bit of a structure that you have in your personal life to sort of keep sane and to refresh and reset. What's your sort of weekly routine look like to balance it all?
Yeah, well, there's obviously some good old-fashioned tricks there, which ain't rocket science, which is definitely exercise clears the head.
For sure.
I'm a big believer in squeezing in, at least 2-3 days a week, which isn't that much with some of the other people out there that live by like 5-6 days a week. But I can comfortably
works for you.
I can comfortably commit to 2 to 3, right? Yeah. But the other thing is also, I remember someone used to say this, Ivan Brezic, I think I can give him a shout out too. Big on work-life balance and taking some time off here and there.
Yeah.
So I feel like sometimes you can get really in the grind of your weekly routine. And you're talking about, waking up early, going to the gym, working all day, coming home, cooking, going to bed, and then it's just rinse and repeat 5 days a week. And then on the weekend, you're almost sometimes too knackered to even enjoy your weekend. And you just want to do nothing. And then Monday comes and just let's do it all over again.
Yeah.
And I feel like sometimes you aren't looking at your life productively. You aren't taking a step back to work on the business, for example, rather than in the business, as they say. So I think breaking that routine and taking time off is really crucial. I take 2 decent holidays a year, the start and the middle of the year, mainly because that's when it's school holidays in our business.
Any Europe trips this year?
Yeah, maybe our last one for a bit if we start trying for kids.
Wow. Mate, we're over there in August. Could link up again.
Yeah. But yeah, I think that's really crucial because when you go away, like I listen to podcasts and whatnot at the gym, and sometimes it's early in the morning, you're half asleep listening to them. I think, breaking up even how you absorb information and listening to a podcast, on a pool chair or at the beach or something like that, and unwinding and having also sometimes just really quality time with your partner, for example. Like you can also go into the grind of work and not get enough quality time with your significant other. And I think that's also equally as important.
For sure. And then balancing it as well. Like I think people get burnout, like what you just mentioned there. Like wake up, get in the car, get transport to the office, and you get home, you're knackered, you got your kids or whatever, dinner, bed, you do that 5 times in a week. And then, like you said, you either do the wrong things to try and reset, or you're too knackered and you're not really doing the things that sort of give you energy back, right?
I come back from holidays so motivated and energized.
Me too.
That's why I also love holidays where things like skiing, where you exercising every day, you end up in bed early just because you're knackered, and you actually come back really energized, and if you've been a bit indulgent on your holiday, that you feel like this obligation to work hard to make up for it.
Yeah, for sure. Yeah, it can go both ways.
Yeah.
Very good. Now, if you could wind back the clock and give yourself some advice, let's say your 18-year-old self, what would you say to yourself?
That's a good question. I reckon I don't know about when I was 18, because that's when I was just knocking on doors and having fun.
Yeah.
I reckon in my 20s, sometimes I was defensive when I was taking criticism on managing the business, and I'd get frustrated when things weren't going as planned. Now I'm a lot more cool, calm and collected about that, and I've got this new attitude in the last sort of like 5 or so years of all I can do is give it my best crack, all I can do is try my hardest, and what will be, and if things don't go as planned, if, an initiative or project doesn't quite turn out as expected, onwards and upwards.
Trust the process.
Everything happens for a reason.
Very good. Well, mate, it's been awesome chatting. Appreciate you coming in today and learning, more about everything and what you're up to. And I'm excited to see what the future holds for yourself, for the family, and for where you're sort of taking the team, and congrats on all the success.
Thank you so much, Blake. Really appreciate you having me on board.
Cheers, mate.